Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the economy in the United Kingdom because things are continuing to get worse. It's just been announced that the UK government has placed a further £1 billion worth of inflation-linked bonds. These are 30-year gilts, and they've been placed at a price of 2.126%. And there was an oversubscription of 3 times. They had orders of around £3 billion for that £1 billion auction. Now you may be sitting there thinking, well, that sounds like quite a successful outcome. What's the problem with that? Well, there are multiple problems with this deal. Firstly, the yield on those bonds is the highest that the UK government has paid at any point in the last 22 years. Secondly, the last time that the UK government held an auction of this nature in November 24, it received orders of £65 billion. So that represents a fall of more than 20 times in terms of the level of interest from the markets. And thirdly, this is a continuation of the increase in debt that the UK government is taking on at the moment. This chart shows the daily balance of payments for the UK government, and the scale on the right-hand side here goes from £10 billion positive at the top to £2 billion negative at the bottom. Now, if we start off by looking at the situation on the 30th of October, which was actually the day when the UK government announced its budget with all of the tax increases, you can see that on that day, the balance of payments was just under £10 billion positive. So basically, the amount of tax that the government was receiving was £10 billion more than it was spending on that day. A week later, on the 6th of November, the balance of payments had fallen to £3.4 billion positive. And over the next 4 weeks, there's a steady increase in the daily surplus. And by the 4th of December, it was sitting at £7.4 billion. However, as you can see, over the last 4 weeks or so, there's been a sharp reversal in this trend, partly as a result of the fact that there's been a sharp increase in bond yields, and that's resulted in an increase in debt costs for the UK government. And what you can see from this chart is that on the 8th of January, the deficit was £0.7 billion. That figure doubled to £1.4 billion on the following day, and by the 10th of January, the deficit was sitting at £1.6 billion. And if you take a step back and have a look at the trend here, you can see the problem that the UK government is facing right now. So how has the current situation got so bad so quickly? Well, in order to answer that, we need to look at what's happened since Labour has been in power. They took over in July 2024, and immediately they launched an investigation into public finances. And the result of that investigation was that Labour identified a black hole of just under £22 billion in public spending, which they attributed to unfunded policy announcements by the previous Conservative government, the impacts of inflation, recent events such as Russia's invasion of Ukraine, and the amount of public sector pay. Now, as part of its election manifesto, the Labour Party had said that it would not increase taxes for the working people of the United Kingdom. However, on the 30th of October 2024, the UK Chancellor Rachel Reeves announced a budget that included tax increases that were the highest that had been seen in the UK for more than 30 years. And it was estimated that the sum total of those tax increases would raise more than £40 billion, which was more than enough to offset the £22 billion black hole that had been identified. So you might be sitting there thinking, so what's the problem? You've just told me that they had a £22 billion black hole, they've raised £40 billion in taxes, so now they should have an £18 billion surplus. And that's absolutely right, that math is correct. However, the problems that the UK government now have is that GDP isn't going to plan, and so they're having to borrow more money, and the cost of that borrowing is increasing significantly. This chart shows the quarterly reported 12-month GDP figures for the UK over the past 3 years. And what this shows is that at the end of 2023, the UK was officially in recession, having reported 2 consecutive quarters of falling GDP. However, at the start of 2024, there was a bounce back when GDP rose by 0.7%. That increase fell to 0.4% in the second quarter of 2024, and in the third quarter, there was no growth whatsoever. UK GDP flatlined. Now, we're still waiting for the official figures to be published for the final quarter of 2024. However, the month-on-month movements in GDP show that GDP fell by 0.1% in both September and October, which gives us a very strong indication that GDP in the final quarter is likely to have fallen. This chart shows the UK's balance of trade, and what you can see here is that in 11 of the past 12 months, the UK has reported a negative balance of trade. So the cost of its imports is higher than the value of its exports. So the UK is now a net importer. And if we look at what's been happening over the past 3 months, you can see that in September, the deficit increased to just under £3.5 billion. And that deficit increased further to £3.7 billion in October. This chart shows the UK's current account, which is similar to your checking account. It tells us whether the UK is building up a cash surplus or running an overdraft. And the scale on the right-hand side of this chart is shown in billions of pounds and goes from 12 billion positive at the top to minus 42 billion at the bottom. And what you can see here is that in every single one of the past 7 months, the UK has been running a current account deficit. And what this means is that the UK is having to take on more and more debt to fund all of its spending. This chart shows the monthly balance of the UK public sector debt over the past 12 months. And what this shows is that since the start of 2024, UK debt has been increasing. And the most recent figure for November 24 shows that the UK currently has £2.8 trillion worth of debt, which is the equivalent of around $3.5 trillion. So as we've just seen, the UK is now becoming more and more dependent on debt. It's having to issue more and more bonds in order to finance all of its public spending plans, particularly because the Labour government said that it wouldn't increase taxes any further. And the biggest problem that the UK government has right now is that the price of that debt is increasing rapidly. This chart shows the movement in the yield on UK government 30-year bonds over the past 12 months. And what this shows is that 4 months ago, in the middle of September 2024, the yield on 30-year bonds was sitting at less than 4.4%. However, over the past 4 months, there has been a rapid increase in that yield, and today it's sitting at just under 5.5%. And if we apply that increasing cost of 1% to the current outstanding UK debt of £2.8 trillion, that represents an increase in interest costs of £28 billion over the past 4 months. And that increase of £28 billion in interest costs more than offsets the £18 billion surplus that the Labour government thought that they'd put in place following the budget in October 24. Now, the increase in bond yields isn't just isolated to the United Kingdom. It's actually happening across the globe at the moment because there are concerns about what's happening in the global economy. And this table shows the increase in bond yields that's been seen in the first 2 weeks of 2025 for a variety of countries. And the figures shown here are the basis point increase, and 100 basis points equates to 1%. And what you can see from this table is that the United Kingdom has seen an increase of 32 basis points for its 10-year bonds and 30.7 basis points for its 30-year bonds in the first 2 weeks of 2025. And that compares to an increase of 27 basis points and 24.1 basis points for Canada, and 23 basis points and 20.1 for the United States. So the UK tops this table. However, all of the countries shown here have seen a significant increase in their bond costs and therefore their debt costs in the first 2 weeks of 2025. So what's the summary and conclusion today? Well, I wanted to post this video because we've been following what's been going on in the UK, particularly over the last couple of weeks, and what we are seeing is major fundamental problems. The UK government set out its stall before it was elected, saying that it wouldn't increase taxes for the working people. Now, that painted itself into a bit of a corner, and so when the budget came around in October, it had to come up with an innovative way of increasing the coffers. And the way that it did that was by increasing taxes for businesses in the UK. So national insurance is paid by companies, and that was racked up. Now, the problem that has is that somebody has to bear the cost, and a lot of UK businesses are now struggling with those additional costs. And as a result of that, we're now seeing GDP starting to come down in the UK. It fell in September and October, and it's likely that we'll see a reduction in GDP when the final quarter figures are announced for 2024. Now, that wasn't in Labour's plan. They were expecting GDP to grow, and if GDP had grown, it would have meant more money for them to spend. But because GDP is falling, it's actually a double whammy because they're having to basically pick up the cost of that lost GDP. And in order to fund it, they're taking on more debt. And in fact, they're having to take on more debt to fund all of the different spending plans. And the problem that Labour is now facing is those debt costs are increasing rapidly. We have seen a collapse in the bond markets over the past few months, and the price of government debt is now at its highest level for around 25 years. And that represents a major problem because Labour has to balance the books. And we saw from today's video that balancing on a daily basis has now gone into deficit. So Labour is spending more than it's receiving from taxes. And this can quickly become a really vicious circle because as your debt costs go up, that means that you're paying out more. That means you have less money to be able to spend on all the things you said you were going to spend on. And so the deficit gets larger. You have to take on more debt. The cost of that debt is rising. Therefore, the interest rates increase. The amount you're having to pay goes up, and so you're losing money on a daily basis. And this is the situation that Labour is facing right now. And as we also saw, the UK is now a net importer. It's buying in more things than it's exporting, and that's further depleting the amount of cash that the government has. So the overall summary of today's video is that the current situation is critical for the UK government. They're spending more than they're earning. That means they're having to borrow more money. The cost of that borrowing is going up on a daily basis. The demand for UK bonds is reducing. We know that a lot of fund managers are selling those bonds, and we also saw that in the latest auction, the amount of bids for the bonds that are being offered was down by around 20 times compared to where it was in November. So all of this represents serious problems for the new UK government. Hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.